lot of people want to know, how much money do I need to bring to the closing table? Well, there's a couple ways you need to figure that out. Number one is you need to go back and look at the original good faith estimate that was given to you by your loan officer. Assuming that the purchase price didn't change, assuming that the amount of money that you put down didn't change, it should be fairly accurate. We find that most of the time, if we can get within a couple of $100 of what we told you, we've done a pretty good job. Because after all, it is an estimate and some things can change. One of the factors that change a lot on a good faith estimate is we estimate how much your taxes are going to be. Property taxes on the house that you're buying, or if you're refinancing, how much your taxes were last year. So if you can get the information when you originally up front buy the house from your real estate agent, or if you can bring your tax record showing what your taxes are, a lot of times that cures a lot of problems as far as how much you need to bring to the closing table. So try to get your tax information up front to your loan officer. But we will typically go and get a closing statement, or a HUD is what we call it in our industry. A HUD-1 is what the attorney statement looks like that you sign at the closing table that has all the final numbers. We try to get that to you 3 to 5 days in advance so you can review that HUD and go over that, kind of match that up with your good faith and make sure those fees are pretty much what we told you. A lot of times things are a little bit different. Some things will be $25 or $50 cheaper. Some other things will be $25 or $50 higher. The main thing is all the numbers work out to pretty much what you thought it was going to be. If your purchase price changes or the amount of money changes during the transaction, you renegotiated something on buying your house, then what should happen is that your loan officer should give you a new good faith estimate with those new changes on it. So as you're doing your contract, if you do addendums after an inspection or something like that and something changes, make sure that you get that addendum to your loan officer and ask him to redo a new good faith estimate for you so that you still stay in line with what you need. Now, what do you need to bring to closing table? Well, some things have changed since 9/11. One of the main things is you need 2 pieces of identification, probably 2 with your picture on it. So I would suggest you get 2 pieces of identification with your picture on it. Make sure you bring that to the closing table. If you have a spouse that's going to be there, or if you are doing it with a partner or a child, make sure they have the same thing. The other issue is you most likely need to bring certified funds to the table. Most attorneys will let you write a personal check if it's $1,000 or less that you need, but if it's more than $1,000, a lot of them want you to bring certified funds. They don't know you, and they need to make sure those funds are good, because if they're not, they're responsible. So what you'll want to do is figure out how much you need to bring to closing. Let's say it's $5,000. What you want to do is bring a certified check made out to you, or if there are 2 of you on the loan, made out to both of you in your full name like it's going to be on the closing statement. And have those funds written out to you and certified funds from your bank. And then what you will do at closing is sign the back and endorse that and give that to the attorney. I usually tell my customers to bring a rounded up number. So if we think you need $4,800, we're going to tell you to bring $5,000. You will sign the check over, give it to the attorney, and he will write you a check back for the difference. If it ends up being $5,100 instead of $5,000, then you can write him a personal check for the overage of $100. So get certified funds, try to round up if you can, make sure you've got plenty of money there at the closing table so you don't have any problems with that. Get your loan officer to get you the closing statement a couple of days in advance, even if it's preliminary. What it does is it forces the attorney and everybody in the process to make sure they've got all their fees kind of in there. Make sure they've got the taxes right, because you've got city and county taxes. They can change depending on the area. You've got cases for, like, one thing that nobody really thinks about that much is if you're buying a house from somebody that is over, I think it's 65 years old, in Fulton County, Georgia, they do not have to pay school tax. So their tax bill will be lower than yours. And so the agent might say, look, their taxes are pretty cheap. That might not be the case for you, because if they're over 65, once you buy the house, the county's going to reassess you, and they're going to put the school tax back in there, and it's going to really increase your taxes. So that's some things I hope that help you out with. But just try to get your loan officer to give you a closing statement as far in advance as you can, even if it's preliminary. Make sure you bring certified funds. Make sure you bring 2 pieces of identification, picture identification if you can, and you should be okay.